Yeah, I think when you talk about tax buckets in general, to me, it's like we've got to make sure the clients understand the basics before we kind of move on to the more complex stuff. So I'll almost always go through tax buckets, and I think there's a few common misconceptions with it. One of the most common misconceptions I see, especially when it comes to tax buckets, is I'm sure everyone on this call that's a financial advisor probably heard the question, well, what return does my Roth IRA get? What return does my traditional IRA get? And you're like, time out. That's not how they work. So the analogy I use is, think of these buckets as garages. So each bucket is a different garage, and the car is the investment. So the car can go in any one of the garages. It's just how they're taxed on the way in and the way out. That's the difference. So I think as much as you can keep the concept simple, because once they understand the baseline of how, the three main money types and how they're taxed, a lot of the other conversations moving forward tend to be much easier to understand and digest for the client.